Hi, thanks so much for tuning in. You're watching BQ Prime. My name is Alex Matthew, and this is an earnings conversation. We're speaking with the management of Data Patterns. Let me, in fact, introduce you to my guest today. We've got the Chairman and Managing Director of the company, Mr. Rangarajan, joining in. Thank you so much, Mr. Rangarajan, for taking the time. Let's start with a brief overview of the quarter gone by. I believe that the first quarter is generally a slow quarter in terms of execution, but what can you tell us about the numbers?
Yeah, normally we're not a quarter-to-quarter business. We're more year-end business. But the last 2 years, we've trying to even out the quarter so that, the cash flows are more clear. We've managed to do that in the last 2 years. And slowly we are trying to bring in the quarter delivery, increasing the quarter-to-quarter delivery. We're not still there. It will still be a large year-end business. But yes, there is a change which is happening because the good thing is we have orders on hand and we're able to position the orders and deliver as against not having orders and then everything pushed in the March end. So that we've been able to do. Some of the products we wanted to actually deliver this quarter, we could not due to other constraints. Though the products are ready, we could not deliver. These will get delivered next quarter.
Okay. You've got new orders, though, considerable wins, 132.7 crore in the context of your overall order book is a considerable number. And it's up, it's doubled on a year-on-year basis. What can you tell us about the latest orders?
These are for avionics and radars and EW.
Okay.
Areas that we've been already working on. And some of the orders have come now. We're expecting more orders in the course of the year. So the order book could go for, we're participating in a number of tenders, but we're not projecting the tender orders because we don't know it's a 0-1 situation. But we're expecting, we have a large pipeline of orders already be executed, where repeat business will happen, where we've taken development contracts earlier, and the production contracts will happen now. So we expect in the course of the next 2 to 3 quarters, where order books should start increasing.
I understand that you won't give me an exact number, but just to give a sense of where you're seeing the potential, or how much could it grow? Where do you see it at the end of the year?
See, we expect upwards of 500 crores this year order intake. Maybe it should be more, but I want to be, more conservative here. But what we need to look at Data Patterns is we are a very differentiated business. We do product development from scratch, absorb development costs through our life cycle. We've done that. And now what has happened is Indian market has opened out to Indian defense industries. Now this is very, very new. Policy framework are in place and people are looking at buying within India. Now this gives 2 options. Either you tie up with foreign OEMs and then manufacture the products here, or you try to build your products yourself. We have taken the option number 2, try to build the products ourselves, for which, we have raised 500 crores in QAP in March. And this is essential product development in 4 segments. And we want to build those products in-house, take it to market in the next 2 years and rapidly scale our business. So we are looking at a multiple time scaling business 3 to 5 years down the line because the opportunities are very, very large. And we've built up a competency model which is unmatched. So we want to back ourselves and build products. This is where we want to go.
I understand. So I also understand 167 crore out of those proceeds of the QIP was reserved for product development. Have you started spending that already?
Actually, it's more than 167 crores. Okay. There's a lot of other general corporate expenses and all that which comes in, all of which will go into product development. We just started. We have put the designs in place. We have started the development work. So in the next 1 year, we will probably bring some of the products out and some of them will come in the second year. They've given us a 3-year window of product development, but I think we should do this within 2 years. We should start building the systems. We also have to create infrastructure to produce the products once we get contracts. This also takes time, so we want to initiate that in the next 6 months. Yes, we have started product development in radars and EW. We are also starting some programs in satellites and in communications. But the progress will be slow now, and it will go up the next 6 to 8 months. You will see a lot more progress happening.
Okay. I'm sure you've already done the math on this, so I'm hoping that you'll give me an answer. Based on the product development that you're currently doing, what is the addressable market for these new products that you're working on?
The potential is very large, several thousand crores of business. So that is the reason we've taken a substantive money from the market to see that we develop this. And this will give me a predictable revenue model coming in the next 3, 5, 6 years to give you a predictable revenue model. This is the reason why we took up this product development. No country, foreign OEM, if you look at defense OEM, works with on that year contracts. They already have 3 to 5 year order book, and they have strong product alliance, which only helps them scale the business. And then they go for merger acquisition to scale it better. We need to position ourselves like that in India. In India, we don't have an equipment company at all. We rely too much on international business, OEMs, to make products in India. We want to do a different trend, build products in India and maybe export them as we go along.
Okay. Last question on the margins, and I understand that this is a relatively slow quarter and therefore 31%. But as I understand it, the steady state that you want to achieve is 35%. The expenses were higher than usual in the quarter gone by. What can you tell us about the move to 35%?
I think we will go beyond 35% on EBITDA. We'll go nearer 40% is what we think.
Okay.
Our margins profile for these products which we'll execute this year will be better than last year. So it will be slightly higher margins than last year. So we should move up as we go along second, third, fourth quarter. We would overall average out to more than 38, 39 or 40, nearly 40%. EBITDA is what we want to go. So that will go. And our expenses are also going up now. See, we are trying to scale our business, create infrastructure for future business. So we already crossed 1,300 people in the company now. We're recruiting more engineers. We're nearly about more than 700 engineers working with us. We also built a second factory. We may have built up another couple of factories as we go along in the next 2 years. So too many things are going in parallel. Not only looking at product development, also create infrastructure and people to deliver on future orders. And this takes time in this kind of business. So we are really looking at long-term value addition, and we are put in the investments now.
Fantastic. Mr. Rangarajan, thank you so much. Pleasure speaking with you, and thank you so much for taking the time and speaking to BQ Prime.
Thank you.